Okay, so I want to show you guys how I cut these two trades, this and this. I use what we call the CRT strategy, which is the candle range theory. This is the CRT 4-hour candle range theory pattern. Now, I do this on the 4-hour time frame majorly. So you can choose 3 time frames that is suitable and that is comfortable for you as a CRT trader. The first time frame is to check for your bias. Bias in the sense that you need to check where the market is heading to, what direction. All right, that's for the first time frame. Then the second time frame is for you to set your markouts. You need to mark out your point of values, which can be the fair value gap, it can be an order block, it can be a breaker block, right? Then the third time frame is where you take your entry. Now, how did I get these two um trades? Now, let me replay. Now, if you look at this, okay, so looking at this now, this bearish candle, this red candle, started forming at around 10 a.m. in the morning, 22nd of July, 10 a.m. This big red candle. And if you observe, it was forming at an area of value. This is what I mean. This area of value, this is a fair value gap. This is the fair value gap, and it was forming inside this fair value gap. When you see your CRT pattern inside a place of value, just know that it has high probability. Now, I saw this big red candle here at around, started forming 10 a.m. to 2 p.m. Then I marked out the high and the low, which is called my CRO high and my CRO low. This is my candle range high, and this is my candle range low. Now, after marking it out, I have to first of all check the pattern. I have to check where is my CRT forming, what is the pattern. As you can see on the 4-hour time frame, it has been bullish, right? It has been bullish, breaking recent highs. It has been breaking recent highs. It has been breaking recent highs. You can see it has been breaking the highs. So it's been bullish, you can see. So it also broke this previous high. It broke this previous high and went straight up to break another high. Then after seeing this, it created a demand zone here. It created a demand here. It created a fair value gap here. Then I have to wait. That's one thing about CRT. Patience. You have to wait. I saw that price was retracing back to this zone. When I see that price is retracing back to this zone, what do I have to do? I have to wait and see if I will get a CRT pattern around this area, right? I have to see if I don't see a CRT pattern around this area, then I'm not taking a trade. So after marking my CRO high and my CRO low, I went down to the 1 hour time frame. Now, as you can see on the 1 hour time frame, another candle swept the CRO low, right? Another candle swept the CRO low. Let's go back to the 4 hour time frame. If we go back to the 4 hour time frame, you would see that the candle that swept the previous 4 hour candle low did that at around 2 p.m. It did that at around 2 p.m. It started forming and swept the previous 4 hour low at around 2 p.m. Then I went down to the 1 hour time frame. Going down to the 1 hour time frame, this is what I saw. This was a red candle, this particular candle here, that, that swept the previous CRO low. Then there was another candle that formed, another 1 hour candle that formed at around 3 o'clock. That candle also swept the previous 1 hour low. Look at the bearish candle. This bearish candle here, this particular one here. Let me get the right tool for that. Now, looking at this candle here, this particular candle here, you will see that this candle is a bearish candle. It swept this previous 4 hour candle. This is the previous 4 hour candle range. It swept it with this red candle. Then another candle swept that candle that swept the previous 4 hour. Are you seeing it? Making it a repeated um, pattern. Making it a repeated pattern. So this same pattern that formed on the 4 hour, let me show you guys. That same pattern that formed around 4 hour, look at it. Observe this pattern and then observe the same pattern. Observe the same pattern in the 1 hour. That same pattern repeated itself here. That is a clear confirmation. This is an A plus setup. Now I have to mark the high of that candle, the high of this candle here, this candle here. Since it's bullish, I am looking for buys. So I have to mark the high of this candle here and wait for price to break. Watch. Now, after marking the high of this candle here, what do? I have to go down to the 15 minutes time frame. I have to go down to the 15 minutes time frame. Look at the markings here. Look at the marking here. I have to wait for price to close with full body around this point. Around this point here. I have to wait for price to close with full body. So let's see. This is it. Price closed with full body. Are you seeing it? Price closed with full body. Then my entry should be around that candle close. My entry should be around that candle close. Then My stop loss should be below this point here. This is where I placed my stop loss. Now, one extra thing I did was I had to convert my chart pattern to the line type so that I can be able to see my fresh and unfresh level. And that's the concept in Malaysian support and resistance. My fresh and unfresh level. Malaysian support and resistance. Fresh and unfresh levels. That is what I use for my confirmation. If you check at this point, there's a resistance that was broken here. Whenever you see a pattern like this in Malaysian support and resistance, people that trade that pattern understands what I mean. Whenever you see something like this, whenever a pattern shows up like this, it means there is a support. It means there's a resistance at the top here, right? There's a resistance at the top here. While whenever you see a pattern in V shape, whenever you see a V shape pattern, whenever you see a V shape pattern, it means there's a support at the bottom. So A shape for resistance, V shape for support. And if price has not mitigated this area of resistance, it means this area is a fresh level. But if price has mitigated it, it means it is an unfresh level. Same thing here. If price has not mitigated this area of support, it means this is a fresh level. But if price has mitigated this area of support, it means it is an unfresh level. So I looked at this point and I saw a V shape here. And price has not gone here to do anything. Price has not come here to do anything. So this is a very, very fresh level, right? Then I went back to my candlestick and I allowed the trade to go. Observe. And I was able to hit TP. I was able to hit TP right here. So this is a simple concept. This is a very simple concept I use for my entry. Now, for the CRT, one thing you need to understand for CRT is that CRT has three pattern formation. Take this to be, let me take this as a red candle. Let me take this as a red candle. Then, if we have another candle forming here, this is my green candle. If we have another candle forming here, which wicks, in this case, it wicked the bottom, right? It wicked the bottom of this previous candle. This candle wicked the bottom. Now, there is a clear sweep of the previous candle's low, right? It's a clear sweep. Once you see this pattern, it then means the next candle, it then means the next candle will go up and probably clear the top liquidity of this other candle. This is a pure CRT pattern. Now, one thing you need to understand is the first candle is the accumulation candle. The second candle is the manipulation candle, which sweeps either the previous 4 hour or daily low or the previous 4 hour or daily high. After sweeping, the next candle continues to sweep the other liquidity. Now, this is for a buy setup, right? This is for a buy setup. This is for a buy setup. This is for a buy setup. Now, if we have something like this, if we have something like this, weaken this top right here. Now you can see the clear difference. You can see the clear difference now. In this case, in the buy setup, the previous 4 hour low was swept, which is the manipulation. Then the continuous pattern here, which is the distribution. And we have this, which is the accumulation, and the top was swept in this case, which is the manipulation candle. Then it continued downwards to sweep the previous 4 hour low. And this is a sell setup. This is set up for a sell. This is a setup for a sell. Now, sorry, this is set up for a buy. Wow, this is a setup for a sell. Now, don't be confused about the candle colors, right? Don't be confused about the candle colors. Just know your accumulation candle, your manipulation candle, and your distribution candle. Here we have the accumulation candle, the manipulation candle, and the distribution candle. In this case, the manipulation candle swept the previous 4-hour low and went straight up to clear the previous 4-hour high. While in this case, it first of all swept the previous 4-hour high, then came down to sweep the previous 4-hour low. It's as simple as this. Once you can be able to detect this pattern on a higher time frame, switch down to a lower time frame, just like as I did here. Just as I did here, it is not different from this. I've been able to structure my eyes to see this pattern, and this pattern is always this pattern will always form at a point of value, right? And when you see it at a point of value, you need to be patient to allow the accumulation, the manipulation to fully form, to allow both the accumulation and manipulation candle to fully form at a point of value. That is just it. There is no big deal here. That is just it. When you keep training your mind to see this, backtest